YouTube, what's going on? This is Terrence Ray, and I'm doing a video on a stock market update today. I was going to do it earlier, but decided to go ahead and do it right now because I just put the trade on. So I want to talk about the big move in the market today, and I also want to talk about a trade. Well, I was going to say potential trade, but I'm already in it. So in oil, and we're going to talk about how to, maybe do some stuff in the futures market. And we're going to talk about that right after the buffer. So stay tuned. Right now on the screen, you see I got the micro E mini S&P 500 futures pulled up. Right now, the futures, S&P futures up about 76 handles. That's almost 2% on the day. Now, earlier, it was up a little bit more than that. It was up, I want to say, about 100 handles. As a matter of fact, it was. And the NASDAQ futures are up about 3%. You can see right over here where my cursor is. And it was up more than that as well. I think they've backed off of the highs of the day so far. So what I did, initially, before I get to what I did, let's just talk about um, market structure, right? So I'm gonna pull up the SPX and I'm going to hide everything that I got on here. We'll hide the drawings, then I'll come back to them. And then I'm gonna back this out to a year. Now I'm on the Tastyworks platform. Link is in the description if you want to open up an account with them. Um, Now let's look at what we got. So we got a series from this. This is the all-time high, right? And then we got a low, and we got a high, and we got another low, and then we got some consolidation, and then we got another takeoff right here. And here we go. This is where we are today. We got a gap up and an up move, right? We don't have higher highs though. And one thing that I noticed is that the market never did go technically all the way oversold. And so what I mean by all the way oversold, if you look at the bottom of my screen, I always have, for the most part, the MACD and the relative strength. This one right here is the relative strength. And I kind of want to see it. I like to see it go oversold on the daily, like on big moves before I look to buy. It stopped before it went below the 30. And for me, and also with that being said, the largest stock in the S&P 500 is Apple. Now let's take a look at what Apple did. Apple did the same thing. So you may hear traders say that bottoms are like an event, right? Or they develop, right? So generally, basically what they're saying is like you just most of the time, unless it's something like during COVID, we had the Federal Reserve like step in like in an emergency fashion, and you seen a V shape. I don't think we're gonna get a V shape this time. So I think what I would like to see at the bottom is something like this right here. Like I would like to see like you got this and you get a little chop, come down and it go up again, and then you start your down move, right? And Apple is just getting started. And in my opinion, this is my opinion, it's just the start of the down move in Apple. We still got a little bit more to go. I honestly think we'll go down to around the 120 range. And you may say, like, well, what does that have to do with the overall market? Apple is I want to say, I heard them say, or a contributor say on CNBC, like 7% of the overall market or of the S&P 500. I know it's the largest stock in the S&P 500. So with that being said, I would like to see this one go completely oversold. Now, when you look at my Fibonacci levels that I have, Now let's bring back those lines, and you see where I drew my fibs in, and you see the last level is right down here around 120. So I'm still looking for that final thrust down, right? And then there's still no guarantee that at that point that it's just gonna start going up. It could just get some sideways action from there. Now, with all that being said, no one knows anything, right? These these lines, these charts, the way I look at them, it helps me draw. It helps me come up with an assumption, and then it's up to me then to find a way to trade my assumption. That might be a good name for a show or something, huh? Trade your assumption. So let's talk about what I did. Being is that I think the market still can go down. I like these big up days like this because then I step in and then I short. Right, on a strong up move, I'm stepping in. Right. So let's look at the SPY. I stepped in here and bought a put spread. Let's go to positions. You'll see right here. Let's go to the trade tab. Now, when I click on trade, I can go to curve view, and that's going to show it, like that's going to take the option chain and kind of let you see. You can see the expiration date. You can see these dotted lines are standard deviations, and this is your expected move. This little brown ruler right here, right? And so I'm going to go back to table view, and now I'm going to click on 35 days. I went out to June, and this is where I'm at. I'm down on this position already because I think I put it in when the SPY was up maybe like $4. And all I did was like, so if I was doing it right now, I would call, some people call this an in out spread, uh, long put spread. I'm getting short. And so basically I'm buying one put in the money. As you could just buy a put and just get short like that. However, you got time decay to worry about. Now, with me buying this put right here, if I was to come right here and sell this one, now I'm not subject to time decay. And it basically, I got a 50-50 shot. The market goes down. This is a $2 wide spread. I'd be paying 90 cents for it. Max profit is 110. And it shows you over here like your probability of profit overall. And if you try to make 50% of the overall profit, it's showing you what you could make. And that's what I'm going to look to do. I'm going to look to try to take, like, maybe if I think I paid 91 cent, maybe I'll try to sell it for 140, sell it for 145, something like that, and try to get out. And you can see if I was to do that, that ups my probability of profit, right? Instead of trying to hold on to make max profit, you try to take off like half of what max profit would be. And that's what I did in the SPY. Now, when I put that on earlier, the market continued to go up. So what did I do? I came over to the NASDAQ and I put the same trade on a little later on in the day. You could see this one because I put it on later in the day and the market has pulled back a little bit. It's up a little bit. So, but both of them, one of them I paid $91 for, one I paid $88 for. A little under $200 worth of risk. I like those. I like that. That's a quick, easy trade. Anybody could do these trades. You can have a small account, you know, and you can still do these trades. And that's the whole purpose of this channel, is to show, how you can still maneuver in the market with options and not tie up a lot of capital. Now you can get as large as you want. You can do as many contracts as you want. So somebody saying you got $1 million account, and you're like, man, that's too small for me. You can do 10 contracts. You can increase the width of the spread. So let me go back to the SPY. So I do, let's say this is a let's say this was a $1 million account or $100,000 account, and you want a little bit more risk, you could come here and say buy the 401, sell the 396. Let's lock it. Now let's look at it. Pay 218. You got a max profit of 282, right? You could still and you could do more than one contract. And that's how so you can either do more contracts or you can increase the width of the spread to put more risk on so you can make more money. Let's take a look at now the what I really wanted to talk about. Those two trades, those are just, that's just me not believing that the market is going to continue to go up. I didn't really put a whole bunch of, technical analysis into it other than the fact that I've already pegged Apple is going down further, right? Let's take a look at USO. I'm gonna take a look at USO and I'm gonna look at the oil futures. Now USO is an oil fund that tracks basically oil futures. So look at the chart. And you can see I already have a triangle that I have drawn. And you can see that we had a gap up today. Now let's also take a look at the MACD at the bottom. Moving average, convergence, divergence. That's what that stands for. So let's look at it. Now I got a crossover or got a bullish cross on the MACD. So my red line crossed over my blue line, and you can see the histogram right here is positive. And you can see that if you look over here, you see it says 0.07. That lets you know the histogram is positive. So you had this cross. That's a bullish cross. These averages are already above the zero line. They're above the histogram. And then they crossed over to the upside. So that's a bullish cross. Couple that what I have trend lines drawn right here at this triangle. So there's a couple ways you can play this. You can do the same thing that I did in the SPY or the triple Qs. My range, my sweet spot is right around 30 to 50 days. If I'm buying spreads, I kind of want to be closer to 30 days. And I like the monthlies. The monthlies are going to be they're going to be more liquid, right? So here I am at 35 days. So you could come in here and you could say you buy one in the money, come right here and make a $2 wide and pay 90 cents for it. If you want to get wider, you can do a $4 wide, pay 163. You know, you can play around with this. You can go for wider spreads or do smaller spreads and do more contracts. That's totally up to you. Now, instead of buying this, you can sell it too. If you let's say you wanted to sell it, you wanted to sell a put spread, which is also bullish, and take in some premium, you could come over here and maybe sell what? The 34 delta. Let's go $5 wide, buy the 20 delta and take in 144. Now you got a higher probability of profit when you do that. The only thing is you got a little bit more risk because now your max loss is 356. So there are pros and cons. Now, one thing about this is you don't need it to go up. You just don't need it to come back below. So it can move down a little bit and mess around, and time can go by and you can still make money when you sell options. I'm a little bit more confident in this pattern. That doesn't mean that it's going to pay off, but I am confident in what I'm looking at with this pattern that I'd get a breakout to the upside and that oil is going to take off and take out this high. Now, you may say, I talked about doing oil futures earlier. So I was showing this in this particular stock. Now, what I did was I did it in the oil futures /CL. And whenever you have a position on in Tasty Works, you can look over here. I don't know if you can see it. If you're looking at this on a TV screen, you should be able to see these dots under the stocks or the futures, whatever the underlying is. It's letting you know you have a position on there. So I came in here in the futures. You see the chart looks similar, almost exactly the same. I got trend lines drawn from this high down touching these tops. And you can see from this low, I got the same triangle. So what I did was I came in here. I came to the now this particular I came to 33 days because you only have 4 days left in this particular cycle. So if you or different futures have different expirations. So oil has an expiration every month, right? But the one that you can tell the one that you should trade, they make it easy for you on Tasty Works. You can trade either one of these, but the one that they have you see highlighted is the one that you really should trade, right? So you come in here because I'll show you. Let's look at the S&P futures. I'll show you what I'm talking about. See how you got all these strikes for this expiration, and then the next month will come in right here. So if you had positions on in these, you would have to roll out to this next one. It's just a little nuance to trading futures. It's a little bit more to it, but to keep it simple, just trade what's the highlighted one. You keep it easy. And you shouldn't be I'm not gonna get into anything. If I trade any type of spread, I'm out before I get around to this level anyway. Even when I'm buying them, I generally a hold right around to like the last week. You know, on this oil, this is if I had bought this one around 4 or 5 days, I'm out. Win or lose, my move should have come already. The way I trade, so I came into 33 days at the time. This one was here, so I bought one here, sold one here. If you were to do this now, you would be buying one here. Let's see, and you would be selling one here, one in the money and one out of the money. And you can see the price would be the same. I think I paid 25 for it, right? Now, don't each tick is worth like 10 bucks. So me paying 25 for it would equate to 250 bucks for the spread. And if I come back here, you'll see it says negative 25. That lets you know I bought it. I paid 25, so that's 250 bucks. Let's go back to the trade tab. These this strike right here is point 0.5. So it's like 108 to 108.5. What that means, so point 0.5, 50 at $10 a tick would be $500. Excuse me. So you can see that same concept as the as I showed on the SPY and the Qs and USO. I just did it in the futures market. And so I wanted to do it in the futures market because, and I'll give you my rationale for doing that. The futures market lately has been moving after hours. So if I do this in the equity market or the cash market, as you may hear some people say, and that's the time frame from 9:30 to 4 o'clock here in the New York session. If I was to do that and I just I can't close that trade out um until the next session, right? When you trade the futures market, I can close that trade out tonight. The futures market has been moving after hours. These markets have been moving after hours. Excuse me. And so if we get a big move in oil, like we going to sleep and then we hearing news, over in Ukraine or Russia or something like that, and we wake up the next day and oil is spiked. It's up 10 bucks. It's up. Same thing with gold. Like we're waking up to these large moves. If that happens, I already have a order set in. Like, and when the market closes today, I'll have to redo this, but I'll have this set. So if it pops up and breaks out of that triangle and I'm asleep, I got it to take profit at 35 bucks, or excuse me, 35 ticks, which would be 350 bucks. So I'm gonna take $100 right off the table. But that can happen overnight. And that's the main reason why I put it in the futures market. So I didn't have any positions on in this particular account until today. I had closed everything out, I think yesterday or the day before, and I had a short in Tesla, some butterfly spreads or something like that. And I was in Las Vegas at the trade show, and so went back. Now I'm back home, and I wanted to get get some risk on. And so just between those three trades, though, that one's 250. Let's just call both of these $100. I got $450 worth of risk. You know, and so these are little cheap ways that you can trade options in the market, and you can learn. You're gonna have to learn some kind of way. So I would say trade small, and then put trades on where you have a higher probability of profit, of succeeding. And you would say, well, man, you picking direction. How is that? Yeah, I'm picking direction, but I'm not, but I'm risking one to make like 50 cents. I'm risking $1 to make 50 cents. And that in and of itself will keep you in higher probability trades. And that's what I have set up. So hopefully you guys, if you want to, see some more on the mechanics of doing um, debit spreads and credit spreads, which is what I do most of the time. Every now and then I'll get cute, put a nice butterfly spread on or broken wing. But that's my game right there, doing debits and credit spreads. So hit the like button, hit the subscribe button, and let me know what you want to see. Uh, I got some nice stuff charted up, and I don't want to make this video too long, so I may come back and do something else. But let me know what you're trading, what you think. Give me your opinions, and if you copy these trades, remember you own these trades. Do these at your own risk. I'm not a financial advisor. I put that disclaimer out there. They're like, well, he told me to do it. Now I told you what I did. I'm showing you what I do. And with that, guys, be safe out there. Be comfortable with your risk. You own these trades. Peace.